Hello, and welcome to Camel Finance. I'm your boy Camel, and it's wild out there at the moment. Lots to cover today, so I'm going to record the first half of this video and then come back after we've got the CPI reading, because really, as I said in yesterday's video, it all comes down to that CPI number. What I've got here is the Luna stablecoin. It was pretty stable for a while, and then not so much. It actually made a low of 22 cents on a 0.22 handle, so that's pretty insane. This has caused an enormous sort of shockwave through the crypto market. You might be wondering what this has to do with anything, but I'll show you in a second. Also, the actual Luna token against this is USDT. You can see it's absolutely fallen off a cliff as well. It's lost 97% of its value. The stable coin, I think, top to bottom, has lost, 77% of its value. It's pretty wild. I mean, you were getting 20% yield for staking this coin, but obviously now you've got to deal with this 77% drawdown, so that's not good. But what is all this about? Well, I found this, and I don't know the validity of this. So maybe take it with a pinch of salt, because, like I said, I can't really say whether or not this is the absolute truth of the matter, but it would certainly explain what's happened. And if this is the case, then this is a buyable dip in Bitcoin, and likely in these Luna and UST tokens, although certainly in Bitcoin. I personally, just to add before we get into this, I don't think much of these two. Luna was a very high performing token, as you can see, but I don't think much of this stable coin. It's nice to have a stable coin backed by Bitcoin, I guess. It's nice to see Bitcoin being used as like the digital gold to back digital assets, but at the same time, like, why buy Luna? Why buy a stable coin? Like, I just don't get, just buy Bitcoin, right? Like, just buy Bitcoin, put it in cold storage. Anyway, but maybe I'm uninformed there. So if this is true, then this would explain the dip. Blackrock and Citadel borrowed 100k Bitcoin from Gemini. It appears on their loan book. They swapped 25k of that Bitcoin into UST. This was all done quietly ahead of this attack. Then when the time was right, they call up Do Kwon at Terra. They say they want to sell a lot of Bitcoin for the UST stablecoin. So as it was a large trade for them, they told him they didn't want to move the market, so they asked if he would buy a large block of Bitcoin at a discount for UST. Do Kwon took the bait. He gave them a huge chunk of UST, and what this does is lower the liquidity significantly. So once he's given them a huge chunk of these stable coins, then they're no longer there to provide liquidity. And at this point, Blackrock and Citadel can just dump all of the Bitcoin into the market and the UST at the same time, causing massive slippage and triggering a cascade of forced selling in both assets. The real problem is that Blackrock and Citadel knew that Anchor, which holds a lot of Luna, was a Ponzi scheme, offering 20% APY, and this crash would trigger more withdrawals than Anchor can repay. These forced withdrawals and selling would trigger a massive sell-off in Luna, thus further breaking the $1 peg and wrecking the market further. BlackRock and Citadel can now buy back the Bitcoin cheaply to repay the loan and pocket the difference. Meanwhile, billions of longs and billions of VAR are wiped out. This is pure market manipulation. So, did BlackRock and Citadel bear raid what they knew to be a Ponzi scheme? Now, to be clear, I'm not calling UST a Ponzi scheme. I actually don't know too much about it. Once I found out it was a Bitcoin-backed stable coin, I don't really care much for stables. And as I said before, just hold Bitcoin. Like, why? I don't see the point. If it is a Ponzi scheme, if that's how they saw it, then this is the sort of tricks that these large funds, this is the sort of tricks that they play all the time. So Do Kwon put out a thread to the Terra community. I'll leave you to go and read this. It's pretty long. I don't read every line of this, but he basically said he understands that this has been tough on everyone. They will basically continue to work on this issue until they reach parity with $1 again. We will build our way out of this. That's what he's trying to assure people of. I'll just pause the video here a second to ask you, if you're not already subscribed, the majority of you aren't, please subscribe. Please follow me on Twitter. I'd appreciate that a lot. Moving on, I have a correction to make to one of my prior videos. Reported on this, it said that MicroStrategy has a margin call level of 21,000. I did say at the time that I didn't think it would be a big problem and that he probably had things in place, but there was no way of knowing. Since then, it has come to light that Michael Saylor has actually said that they can withstand a price drop below $3,562. So that's obviously I mean, to me, 21k seemed a bit low anyway, and I did say that at the time. I said, you know, will it go there, won't it? Probably not, but it might. But I do not see 3,500, so therefore, I don't think there's much to worry about. Saylor also said that he has other collateral, some other collateral that he could pledge if needed to cover the margin call, should it occur. So it probably won't. But if it does, you know, we can go way below 21k without having to worry about Michael Saylor having to dump all of his Bitcoin on the open market. It's about to get deeper. Coinbase is trending on Twitter today. In the latest filing with the SEC, they said, in the event of a bankruptcy, our customers could be treated as our general unsecured creditors. So in other words, when they eventually go bankrupt, they will use your crypto to bail themselves out. I mean, this is no different to a bank. If your bank goes bankrupt, it's likely going to take any savings you have with them to bail themselves out. I think people seeing it in writing just sort of has shaken them up a little bit. There was never any doubt in my mind that not to keep crypto on exchanges. I mean, this is the exact reason. It's only safe if it's offline on a cold storage wallet. And even then, you want to be using multi-sig and stuff to prevent and protect yourself in the event of a burglary or something like that. But that's maybe a conversation for another day. This is certainly shaking people up a little bit. I guess seeing it in writing makes it real. Although it was the case all along, I can guarantee you that any crypto on any exchange, you know, if it gets hacked, are you going to get it back? Well, probably not. If it gets stolen, are you going to get it back? Probably not. And if the exchange collapses, are you going to get it back? Probably not. And this is just kind of evidencing that. The CEO of Coinbase, Brian Armstrong, has said that there is no risk of bankruptcy. And I would think that given how expensive their fees are, given the number of coins they have, given the number of the amount of crypto they hold in their own custody, I don't really think it's that likely that they would go bankrupt. They've got to be among the more profitable of all of the exchanges, just because the user base is so big and their fees are so high. But if you do have any Bitcoin or crypto, then it's always worth remembering this adage, this age-old adage from the crypto community. Not your keys, not your coins. Keys, of course, referring here to the private keys. If you don't own your own private keys, i.e. if you don't have your keys stored on a Trezor or a Ledger or some other cold storage device, then it's really not your coins. And I have already kind of mentioned this, but just to summarize what I'm trying to say here, if you keep crypto on an exchange, is it really yours? This is the same for anything. If you keep money in the bank, is it really yours? A lot of people would think, yeah, it's my money. It's only your money until the bank decide you're not having it back, and then good luck getting it back. It's only your money until your card stops allowing you to take money out of an ATM, right? Unless it's cash in your hand, it's not really yours. This is true of gold. If you own paper gold, it's only your paper gold until the provider decides, oh, actually, we can't redeem that, sorry. And then what? Then what are you going to do, you know? Only gold in your palm of your hand is yours, only cash in the palm of your hand is yours, and only Bitcoin or crypto on a cold storage wallet is yours. So remember this, guys, not your keys, not your coins. Great call here from Jim Cramer. This man is top tier when it comes to price predictions, working, of course, for CNBC. We like Coinbase to 475. I hope nobody got too caught up in this. It all sounds pretty bleak, to be honest, but I have to look at this and I just can't help but wonder, like, is it time? I'm not saying it's time yet, but is it time to start thinking about maybe looking to accumulate some of this in longer term accounts? I was thinking about maybe adding some to my pension. I know there's this big scare about, oh, what if they go bankrupt and they'll take all your money or whatever, but like I said, you know, Coinbase is probably not going anywhere, in my opinion. I mean, I could be wrong, but the more it goes down, the more attractive it becomes for me for a longer term hold. So I'm not really interested in trading this, not really interested in this at the moment. But if we can sort of form a base sideways perhaps for a while and then start to emerge from that base, I think I'll be certainly considering adding some of that to my pension account or longer term accounts. ARK has bought more Square and Coinbase as Bitcoin price dips. And ARK is another one. It looks absolutely terrible. Awful if you bought it any time in the last, I don't know, couple of years. But I've been thinking this lately for ARK as well. We were at $40 and a lot of what they hold is actually not profitable at all. And could this go further down? Maybe. I mean, sure, definitely could, but I think we're getting into the range where this becomes a sort of buy some and tuck it away for the long term. Stock futures rise ahead of the key inflation reading. As I said in yesterday's video, everything hinges on this. If the CPI is really bad, then I would expect markets are going to tank. But if the CPI is starting to, if the rate of change is starting to decrease, or the CPI is much lower, then I reckon we get a very strong relief rally out of this. Alright, so part 2 of the video. The S&P 500 futures have cut gains turn negative after April inflation rises more than expected. So we were expecting an 8.1% increase, and we've actually had 8.3%. So that is above expectations, but it is below 8.5%. So what does this tell us? It tells us that inflation is still a problem using their CPI number. But have we seen peak inflation at 8.5%? That's the big question here. We're seeing signs on a month-over-month basis that inflation is peaking, says this guy from this place. So of course the question is, how's this going to translate to markets? Well, initially they are selling off on the news. Futures have turned red. They were up about 1%. Bitcoin's still in its green box, so it's going to be an interesting trading session today. Make sure you're careful out there. The number being at 8.3%, 0.2%, nothing to be concerned about. But if we are going to find a bottom, we really need to do it ASAP. And this is true of Bitcoin as well. Bitcoin is in its green box. This is critical support for Bitcoin. So if it is going to find a bottom, it needs to do it in the near future. So the silver lining is that we have probably seen peak inflation for now, at least. Inflation has gone down month on month, and it will probably only take one more reading below this 8.3. If we can get a reading below 8.3 next month, we might finally be able to find some relief. We might be able to find some relief shorter term, but this is an incredibly uncertain time at the moment. So all we can do is kind of watch from the sidelines and try to protect your capital as best as possible. If you found value here today, I'd appreciate it if you could subscribe to the channel. Help me flip these two metrics. And until tomorrow, I'm your boy Camel. Take care. All the best.